What's going on, YouTube? This is Tiger. This is my first video for my new trading channel. Want to start with a story for you. Imagine you're on a Boeing 737. You're up in the air. You're 30,000 feet up in the air to be exact. You're looking out on God's green earth. All you see is blue and green or snow, depending on what part of the world you're in, onto the ground. Can't see anything. You start coasting in to the airport, 25,000, 20,000 feet, 15,000 feet. Okay, now you start to make out some buildings. 10,000 feet, 5,000 feet. Okay, now you can start to see some people. They look like little ants, right? 2,500 feet, 100 feet, boom, you hit the ground. Now you can see everything around you out the door, out the window. Trading, for a lot of people, is that 30,000 foot view. They don't get close enough to really understand the details, all the details around them, okay? That's the point of this channel. We're going to start from a 30,000 foot view, and I'm going to give you that 30,000 foot view of what trading looks like. But we're going to slowly, with each passing video, start to descend in to the airport, and you're going to get a lot more details so you understand the why and the how, okay? The basics of trading, everybody knows. Buy and sell, right? You click on your smartphone, your laptop, your computer, find a broker, maybe you add a few bucks. Robinhood is a good example. Boom, I want to buy $50 in Bitcoin, just as an example, right? That's your 30,000 foot view. That's as far as a lot of people go. But that's not trading, that's gambling. That's going to a slot machine at Vegas, throwing quarters in there, or your card, I guess that's digitalized now. Pulling the handle and just going to town. Whatever happens, happens. That's throwing mud on a wall to see what sticks. That's not trading, that's gambling, okay? So the purpose of this channel is to bring you in closer to the details so that you understand it better. And you can make educated guesses as opposed to pulling a slot machine. That's it, okay? When COVID happened, when the pandemic was here, a lot of people started trading. In fact, the industry exploded because everybody was stuck at home. Maybe you got some governmental checks if you were lucky enough. What am I going to do with this money? Let's go play the markets. Well, unfortunately, a lot of people just looked at that as a gambling, as a form of a gamble. So anyway, the whole purpose of this first video is just to show you a couple things on the 30,000 foot view, and then that'll be it. This might be one of the most important videos. If you have any interest in trading at all, or you or somebody you know, this will be the most important video that you watch. And it's not even going to take me but less than 10 minutes for now. Okay, so let's look at this. What moves markets? What moves markets? Well, I'll tell you, there's some analysis we have to do to determine what asset's going to move. Whether it's a foreign currency like me, I trade the Forex market, foreign currencies. Whether you trade stocks, crypto, options, futures, orange juice, cotton, it doesn't matter, okay? What matters is the balance in the relation of supply and demand. Supply and demand, that's it. That's what moves markets. Well, how do we figure that out? Well, we do it by a few different things. Number one, technical analysis. Let's spell that the correct way. Analysis. Wow, Tiger. Technical analysis. What else? Fundamental analysis. That's what I was taught. I went to an online trading academy a little over a decade ago, and they beat that into our heads. Mainly the technical analysis, but they touched on fundamental analysis. There's one more thing. Sentimental analysis. There's a relationship with all three of these. Right there. If you can master those three, boom, you can make money in the markets. As simple as that. Okay, video over. Just kidding. Now, there's an order to this. See, I spent most of my time focused 100% on technical analysis. What the heck is technical analysis? Well, that's just quite simply your charts. Okay, here's an example. Canada dollar, Japanese yen. It's a currency pair. Okay, you're trading the value of one currency in relation to the other. Okay, that's the sexy stuff, what they call the sexy stuff. Finding patterns. See, I was not a big fan of math in high school. I hated it, but for whatever reason, I did great in geometry, and I had A's in it, A plus. Every other math class, nah, C plus, and I was stoked. But when it comes to geometry, A plus. So that's probably why I like trading so much, because it's all about finding patterns in the charts. Now, is this the most important of those three analyses that I mentioned? What do you think? Do you think this is the correct order of operations? Nah. Watch this. That, in my opinion, is the correct order. If you can figure out these three types of analysis on an asset, you're well on your way. It doesn't happen overnight. This is not a get-rich-quick scheme. Okay, this takes a lot of time to get good at. The basics of trading. That is the basics of trading. It is simple to learn, but what takes the most time is understanding all the nuances. Okay, what the heck is fundamental analysis? Well, that's your daily, weekly, monthly, quarterly, annually reports that come out, economic reports. Global economists, they predict. They come up with a forecast for things like gross domestic product reports, consumer price index reports, unemployment reports, interest rate hikes or decreases. Okay, there's about 8 or 10 or 12 main ones. So that's something that another video that I create will showcase. But that's the nerdy stuff. That's the stuff that's boring, okay? But there's ways to make that less boring, and I'm going to help with that. Sentimental analysis. What's that? Well, if you're like me, you trade at home on your laptop. Maybe you trade on a smartphone. We're called retail traders, okay? If you work at a large bank like Citibank, Wells Fargo, you name it. Citibank, Wells Fargo, Goldman Sachs, right? Swiss Bank, if you're across the pond. All these big banks, that's what's called the big money, the big banks, the smart money, if you will, the financial institutions. They're the ones that move markets, not us. Okay, they're moving millions, hundreds of millions, and even billions of dollars daily. Okay. Meanwhile, we're sitting here with our measly $5,000 accounts, $25,000 accounts. That's small potatoes in relation to the big banks. So that's its own analysis, is the relationship of retail traders and then big banks. And here's a hint: they almost always diverge from each other. If retail says prices are going up, the big banks are probably on the opposite end. It's going down, and vice versa. Okay, I read a story in a book a long time ago. One of the big traders from like the 20s and 30s. He said that he got his shoes shined, and this was right before the crash of '29. The shoe shine kid was talking about how high the stock market was going. Well, that let that trader know, oh my gosh, everybody's buying, so we should probably worry about the markets going down. Okay. So basically, when it comes to retail traders, we observe the masses and do the opposite. That's its own analysis. Okay. And then again, technicals is the charts. So that's it. Now look at this. This is my order of operations. Now I color coded these on purpose. Fundamentals, dark green. Sentiment, light green. Technicals, yellow, orange, whatever color that is. I color coordinated those on purpose. Green's the color of money. The fundamentals are green because that's what moves markets. The sentiment, that's a little less green, but it's just as important. And the technicals are the least important. Okay? Fundamental and sentiment, that's the who, the what, the why, the how. The technicals are the when. So just keep that in mind, okay? Who, what, why, how. Who, what, why, how. And then the technicals are the when. That's it. Now we're going to look at this and we'll be done. What's fundamentals? Okay, look at relevant calendar catalysts. What does that mean? That's the news that pops up each day. Whether the president, the prime minister, the premier of all these countries around the world, every time they open their mouth and flap their lips, it will move markets. The Federal Reserve chairman, right? Anytime they're speaking, the markets are going to be doing this. It's going to look like an earthquake telemetry machine or whatever it's called. Up and down, up and down, up and down. That's important to know, but not to place a trade. This is what's important to know. Look at relevant, recent, and upcoming fundamental report releases. And then I just put a couple sources, news sources, by the way, in parentheses for each of these. That's your economic reports. That's the GDP release, the CPI, the PPI, the interest rates, the non-farm payrolls, okay, the unemployment rates. That's what that is. Again, that's what moves markets. And then below that, you got, again, the retail sentiment as a contrarian, because remember, we're observing the masses and doing the opposite. And then for the big banks, we're looking at something called a COT data, COT report. It's called the Commitment of Traders report. That's going to be its own separate video. That shows us the overall positioning for the big banks and institutions and all the assets overall, but also week to week. So that's going to be an important distinction, which I'll get into. And then finally, the technical analysis, which again is the when. This is just simply to help us time those entries. Remember, the who, the what, the why, the how, that's the fundamentals and the sentiment. But the when, that's the technicals. That's 4 words for fundamentals and sentiment. That's only 1 word for technical. You can see the importance. Okay, technicals, in my opinion, this is just my opinion, that's the least important of the 3. We're going to look at the indices for daily direction, like it shows there on number 5. So we're going to, for me personally, I'm a currency trader. I'm looking at the Dixie, what's called the Dixie. It's the dollar index. I'm looking at some of the futures in the indices as well. The S&P 500, the NASDAQ, the Dow, the Russell. Okay, they've got their own indices, their own index, and they've also got their own, some of them do, their own futures instrument that can be traded as well. If not all of them, I don't know. I'm not a futures trader, so I'd have to look at that. But I want to know what general direction the markets are going, the indexes, okay? And that's important regardless of what you're trading. So I want to look at that first thing. Where are the indices going? Up, down, or sideways? Number 6 there, Forex heat map. So I've got there's a heat map I have that shows me the percentage gain, percentage lost for the monthly, the weekly, the daily, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute time frames. It's not as important, but I just like to know what currency pairs have done lately, okay? And if it's going to get close to number 7, some of my demand zones. So I'm also going to show you how on number 7, how we set the curve, how we see what trend, is it going up and down, okay? What's a demand zone? We'll go over that. And where are those demand zones within that trend, within that overall curve, okay? And then there's another, finally on there, you see fair value gaps, FVGs. Not super important. It's just a little bit more of an odds enhancer that I like to use. We'll go over that as well. How fast does price leave a supply and demand zone? Is it fast, or does it just kind of slowly mosey on out? That's important. These things are important. And then number 8, look at relevant candlestick patterns. I got a website for that. It's just like basic candlestick patterns. I don't want to get into it now, but that has some that helps me out with the actual entry point, the timing, if you will. And then finally, we place the trades. So that's it. That's a 30,000 foot view. But I wanted you to understand first that, in my opinion, the most important thing to master is the fundamentals, followed by the sentiment, the 2 boring items, and then finally the sexy part, which is the technical analysis, the charts. All right, that's it. That's it. Let's have some fun. I'll get this posted soon. Y'all have a good day.